Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, May the 26th. The year's 2021. Let's talk trading. Trading without emotion, part 3. Friendly reminder that these videos are for educational purposes only. Your results may differ from mine. Trading without emotion. It looks like this week I'm hitting home with a few traders out there. They're saying how they're having a little trouble with handling that emotional part, that third leg of the three-legged stool, which emotions, your psychology, that's one leg, your money and risk management, that's the second leg, and the third leg being the method that you choose. Now, one of the things about the method that you choose is whether or not you trust it. Do you have faith in it? Do you believe in it? Now, there's a couple of ways to have faith in a method and to learn to trust the method. Of course, if you trade a method and right off the bat you start winning, you probably start to trust the method. You believe in it. You have faith in it. You've got proof that it works because you've got more money than you started with. But what happens is sooner or later, things don't go your way. You do everything that you're supposed to do, but the market is just not smiling upon you. The market's starting to eat your lunch. And as mentioned before, most traders usually are going to react by monkeying with the method. And you can almost bet that they're going to start adding indicators. You can pretty much take that to the bank. You're going to start out with something simple like this, the wall method, and you might try it for a day or two, and maybe it doesn't quite work out. And so what do? You put some squiggly lines on it. Or you want to put the 5-minute 3-level ZZ on a 1-minute chart. You're going to want to use some kind of Renko candles, or you're going to want to use Heikinashis, or you're going to want to put the Ikimuku cloud or whatever that thing's called on the chart, or some moving averages, or some oscillators. You got to have RSI and some stochastics and some MACD. And pretty soon you have a chart that's just so cluttered you can't even see price anymore. I've literally, if you go out, if you Google charts on drugs, I think you'll see that one thread. We've got some real doozies out there. But I mean, this chart here is really pretty much all you need. You know where you're going to go long, you know where you're going to go short. And either the market smiles upon you or it doesn't. And there's nothing you can do about it. And that's why, when we talked about placing your bet, I mean, if you placed a bet right here, short at the 41.20, then you just wait and see. Does it hit your stop? Or does it go the other way? Maybe you placed a bet at the 41.30 long, and maybe you just got stopped out. But that's just how it works sometimes. That is just how it works, and there's not too much you can do about it. I mean, if you take a look here, as we say look left, this was the start of the hour, and you look at that last hour, it went above but didn't close above. It failed to go above, went above but didn't close above. Now, as Walmall notes would say, he wouldn't have taken that trade because it wasn't the first touch. And you look left, and then if you look on the other side, well, here on the downside, right here, maybe if you took that trade, you could have taken some pips. You go to the well again or the well again. As you can see here, price failed to close below that 20 line, except for there, it barely closed below it, 19.6. And so when this happens, what's the chart telling you right now? It's telling you price is stuck pretty much between 20 and 30. It's not breaking out. Now, eventually, I believe it'll break out. And in fact, I'm kind of targeting here because there's a nice big long candle, return bar as we like to call it. And so usually price wants to return to that level. So that's what I'm targeting. Because you can see here we had a nice long bar, and what happened? Price returned to that level. And if you look at the order block, boys, let's see. There's an order block that price returned to and hasn't left out. And then right here, there's an order block, and here's another order block. So we're well within these order blocks. So if the order block boys are right, then price is going to go back up, maybe to this area. But the emotion part, how do you eliminate that? How do you prevent yourself from succumbing to things like adding indicators onto the system? You just don't do it. Maybe what you do is that you set up a platform, or maybe it's a different computer, or maybe you have multiple copies of MT4, and the copy you use when you're trading, you've eliminated all the indicators except for the ones you use. You just go into the navigator to that indicator folder, you just delete them all. And now you don't have them. So it would take effort for you to add something. Is that overboard? Doesn't matter. Is that drastic? Doesn't matter. You set up the environment for your success. And if that's the only way you can do it, then that's what you do. I mean, you could have a computer where maybe you have a tendency to click on different tabs. Maybe you have it so those tabs don't work anymore. All it is just a trading computer. And then when you have to update, then maybe you have to put on the browser or something. Yeah, it's drastic, but sometimes, if that's what it takes, because you don't have the discipline, because discipline takes energy. But if your environment is set up that supports what you want to do, then you don't need that energy. Because if I wanted to go somewhere else and there was nowhere else to go, then I got to stay here, right? If I couldn't get anyplace else. And so that's just one way. And the other way, as I've said it, you as a trader, really, you have to become a trained monkey. And so the monkey goes short here and the monkey goes long there, and in between the monkey really doesn't do anything. He just waits. And so, you might be tempted. Well, if I go short here, maybe it'll go there and I could pick up a couple pips. But that's not your trade, or not your trade, right? Not your trade. It's not your trade. So you don't do it. You wait. You have to have that discipline. And I know it's tough. I really do. But you have to remember why you're trading. I would assume it's to make money, because if you're doing it for any other reason, then all bets are off. So if you're trading because you want to make money, you want to end your session with more money than you started with, then you have to be kind of serious about it. You have to understand what's happening. You have to have your three-legged stool in place with all the legs being strong and the same length. You don't want to wobble or fall over. Because once again, the method's easy. I mean, this method's simple. You know, if you want to trade the DSRs out of the lower highs and higher lows, you know, that too is a simple method. And it's just basically, you know, sitting and waiting, executing flawlessly when the time comes. That's all it is. You know, and whether you have, you know, imbalance, you've got multimeters where you're tracking close minus open, so you can see, okay, the H4 bar, H1 bar is 4 pips below the open, the H4 is 19, ditto for the daily, weekly's 18. So, you know, if you want to track those things, okay, we've got imbalance prices in the balance zone on M1, M5. We had a 2 ball on the top right here of M1, 1 ball on top of M5, but 3 balls on the bottom, most recently of M15, M30. You can track all that stuff if you want. You know, you can see what's the range. Okay, we got 15, which is only 45%, or in the 45 percentile here. We had 16 last bar. So maybe we'll get a little more range this hour. Maybe, maybe not. You know, you can look here and say, okay, we're at the 19th hour. And as you can see, we had 37 bars above 13 pips and 5 below, with the minimum being 10.6. So there's still 10. So that's still not too bad of a range. But you can see here from here to here, with one exception, they're all in double digits. So, you know, after this hour and before this hour, you don't want to trade the Walmart method. And that's just pretty much finding the pair that works with the method and when it works best. So you can see this has been broken down to a science. So we know when to trade, how much to go for, and it's real simple. So like I was talking to one of my trading buddies out there, and he know if he's listening, he knows I'm busting him because he wanted to start monkeying with the Walmart method. He's sending me all these charts and everything, and I said, look, the method is already proven. Don't mess with it. Don't complicate it. Just trade it as is. I know there's some traders out there still struggling a bit, but maybe you're trading it in the improper hours. Yeah. Maybe you're trying to get too many pips. Maybe you're not willing to cut your loss quickly. Maybe, you know, you think, oh, it'll come back. It'll come back. I mean, you know, if you would have tried that somewhere in this hour, you would have been crushed. But what was really interesting, you know, price came down and went back up and went down again. Now it's doing this. It could go down or it could come back up. Don't know. That's trading. We just have to wait and see what happens. So once again, if you're going to trade and you're going to, you know, try to get rid of those emotions, keep them in check, you just follow your rules. And most of trading is waiting, as I pointed out. It only takes a click of the mouse to enter and a click of the mouse to exit. Everything else in between is just waiting. You're waiting for a signal to enter or exit. And part of the problem is that, you know, we have the exit playbook, but that's only based on one set of criteria. You know, there's other criteria, especially if you're scalping, day trading like we do, that comes into play, and it comes in the moment. And I think when Walmart gets back from vacation, we might go through. I was going to call it hold. What is it? Fold, hold, or hit, because there's many times when you have to, you know, exit one plan and pick up plan B, take the money, even though it's only 2 pips because of something you see. So, fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One. Over and out.